right, so welcome to Game Plan Sunday. Today is March 7, 2021. Had a pretty interesting week this past week. Taking a look at the broader markets here. We had the oil market that was up 7.49%. Dow Jones Industries up 1.82. The U.S. dollar was up 1.16. ES was up 0.81%. The Russell, gold, and NASDAQ were all negative. Interesting. So yes, the tech stocks got smacked up last week. Very, very interesting. We'll get into that here in a second. What was interesting is that gold was also down and the markets were spooked by inflation. So it's a lot of different mixed things going on in here. But for the most part, the inflation situations will really drilled the markets. When we was taking a look through the sectors here, energy sector was the number one sector, of course, this past week. So we had energy, we had financials, and we had the industrials. So those are the ones that were best performing. You know, that's where the money was flowing at this past week. But basically, we had the what was interesting. We did have Texas and Mississippi that actually rolled back their mask mandates and starting to open up their state's economy. Now, I told you guys this before that, you know, there's no way they're going to be able to keep, you know, people on lockdown forever. So you have to, you know, you have to anticipate the opening up of the economy. And that's what, you know, we're seeing here in the markets is everybody's anticipating the opening. And that's what's happening. Now, you know, they're talking about, you know, these vaccines and what have you. It's a lot of stuff with that. I don't really know, but that could be risky with the vaccines because I don't think they do what they actually say they're doing anyway. But let's just say if they don't, or they have other strands that mutate, and that could be a particular risk, right? But they're making this case that, you know, the hope of the economy is based off of vaccines. I just think it's baloney. They just need to open the economy up, point blank, period. In fact, everywhere I've been going, as I said, the past Game Plan Sundays, everything has been, you know, been jumping. You know, the grocery stores, you know, the Target, go to Target parking lots, Walmart, wherever. They are packed. You know, people are tired of staying in the house. They've had enough of the lockdown. They had enough time to take a look at this coronavirus situation to know that they are willing to take a risk with it because maybe it is not as dangerous as they make it seem, you know, in the news. When you actually consider that China, where it originated from, is open. You know, people are shoulder to shoulder. They're open. They're living their life. And so you got to open this thing back up. And so a lot of states are starting to jump on this thing. Hey, we got to open it up. I mean, you got to, because they've destroyed so many businesses, small businesses gone, right? And this is very fascist. This is totalitarian technocracy that we're in here. When we talk about like the Great Reset and all these guys, these central planners, that this has been a long time plan. They've been wanting to hijack the economy to get it out of the natural and so that they can control it. They talk about it in the book, the Great Reset, right? But these things have been going on for a long time. Because of technology, they feel like they could actually do it now. But they cause all these disturbances and, you know, they pick their winners and losers, right? So obviously Amazon is going to get all the money. And that's why you see them acting as arms of the government, talking about facilitating, you know, vaccines and all that other stuff. They know they're going to be the winners. But you need small businesses for the economy, okay? Not those small businesses, you're done, right? And we're done, basically. Unemployment numbers are, you know, crazy, still high. We had over 700,000 filing last week. So we have elevated numbers. Now, the thing is that Powell had a speech that spooked the markets through the Wall Street Journal. And we were watching it in our group on the website, Wall Street Jackboyz. I think Jonathan was in there. I forgot who else was in it. Ron was in there. But we was actually, you know, watching it live. And I was giving commentary about, you know, what I was hearing. And it was interesting because we're looking at the markets live, we're listening to Powell live, and we're seeing, you know, what the markets feel about what this guy is saying. And so the markets, if y'all remember who was live when we was doing the trading, the markets was rallying up into the meeting. So the markets was rallying up. And then when the meeting came, the market started puking. And it started puking because, you know, normally Powell can lie his way out of stuff, but this time the markets was not feeling the lies. And basically, he was saying that the inflation, he don't see inflation being the problem. He feel like inflation is going to be, they're expecting inflation, right? Obviously, they're trying to create it, but he thinks that it's going to be temporary. It's not going to be long term. And, you know, if they see any kind of inflation that, you know, he'll have tools that he can use to, you know, to calm the fire, right? And so what they're trying to do is they're trying to basically put the lighter fluid on top of the fire, spray the, you ever, try to light a grill, you put the lighter fluid on it and you hope you get a flame. So that's what they're trying to do. He's thinking they're going to get like a little flame, but it's going to go back down. But what happens when the whole damn grill catches on fire, and you don't have nothing to the side to put on this fire to keep it down? You burn the whole damn house down, right? So that is kind of what the markets is seeing here when we look at, through the bond markets. And we can see that through the bond yields, which I'll pull up here right now, through our handy dandy yield curve. This is on the website, by the way, for you guys, on the Wallstreet Jackboyz website. If you're not, make sure you subscribe today. It is free. But if you just go up here to this little magnifying glass, you can actually click it, search it, and then put in yield curve, and you'll be able to pull up the chart itself. So I just want you guys to remember the new website is the best in the whole industry. Nobody's seeing our website. We got the best. So bring your friends, tell them to come enjoy. But it's a lot of tools here for you guys is built into the site for you to use for your own studies. That is one of them. And I build this myself. So here you go. Bing. This is the yield curve chart. Now, when you see yields go up, that means that bond prices are going down. That means people are selling bonds. So selling bonds is the thing. Yields going up. So I got 3 different curves that's on this chart right now, although we don't need them. Let me just actually take off the 30-year, and I'm gonna just give you 2. Okay, so we have the 3-month and the 10-year. 3 months is short term. This is what the Feds control, and then the 10-year is the bond market, basically. Okay, so these are our oracles into the future. And if you can see this gray line here, this is what the Feds control. They're manipulating it. They keep it suppressed, and it's trying to influence people to go and take out debt, okay, to go and get mortgages, to get car loans or whatever. It's designed to get you to spend money. That's what it's designed for, okay? And so what they do is they try to keep it suppressed. That's why they drop it down here. And we've seen the impacts of that where, housing is booming, right? So housing is booming. People are trying to take advantage of these low interest rates. And while they're low, that's good, right? The markets are basically saying that Powell is going to have to raise these rates prematurely. He's going to have to raise the interest rates prematurely because inflation is going to get too hot. It's going to get to the point where the whole grill catches on fire, and you just gotta, you ain't gonna have a choice but to throw the water on it to get this thing cool off and use your fire extinguisher. And that's basically what they're saying. So they use a lot of political terms. They talk about using tools, or we have tools, or when the time comes we'll be able to use our tools. But the only tool is this right here, the yield curve, right? This is what they're going to do this on, right? And so there's speculation that the Feds are going to do what's called yield curve control. They're going to go across the long-term bonds and start buying these out. So start buying these to keep the rates from going up. Right now you can see this trend is going up. Well, again, the Feds, they're on the gray line, not the blue line, but it's talking about basically coming in and buying at the blue line to get the yields to go down. As bond prices go high, the yields go down. So buying indicates the price to go up. So that may be something that we will see happening here. Okay. But this is everything that they're talking about. Now, I got a couple of little indicators here on the chart that's built in here that's showing you that this is where we were before the crash, and then this is where we are today. And we're beyond where we were before we got into this whole pandemic, and that is very troubling. And I see that TD Securities, TD Bank, they have a 2% target on this, so I got that labeled up here as well. They expect this thing to go all the way up to 2%. So again, I don't know how it's going to play out, but I make sure I put those targets up there so we could take a look at them. Now, the thing is that with everybody pent up in the homes for so long, ready to come out, it's going to cause things, and it's already causing things to go up now. Everything is going up. So cost of living and everything is going up. Now, the problem is that when things get more expensive, people have to spend less money, because their money doesn't go as far as it could otherwise. And so as prices go up in all facets of our life, it should cause, the spending to go down, would cause people to try to save money. Okay. Now, the another way that they read the yield curve is when the yield is going up, that this is an indication that the economy is growing. And that could be true, that it is growing. But it's just like you're trying to grow that fire on the grill. If it gets out of control, you're done. There's nothing you can do to put it back in the box. And that is what the stock market is seeing. So the stock market puked because they don't believe what Powell is saying, that he can control it. They think that he's going to have to prematurely raise interest rates. Now, raising those interest rates is going to pop the current bubble. Okay, you will see defaults and stuff because people can't afford it, right? We have record levels of unemployment, right? So a lot of the money from all of this manipulation that the central planners have been doing has been going into the stock market. So the stock market is in another bubble, right? So we basically came out of the stock market bubble where the economy is still down, but the stock market came up, but it's in another bubble phase, and it is high at risk of popping, especially if they have to raise these rates. It's done, right? So that is what the markets do not want. And he is trying to assure the markets in his meeting this week that he's not going to raise the rates. And I was listening to the president of the Philly Bank, Fed Philly Bank, and he was, trying to say the same thing that, they have it under control. They don't see any kind of inflation anytime soon. They thinking, 2023. Janet Yellen said the same thing. So they'll come out to say things because it's all psychology to try to keep people, calm. So you don't, create, some kind of panic. And so when they do that, it's supposed to assure the markets. But I think the markets basically saw through Powell's BS. That's basically what we saw this week. Okay. So anyway, had a couple of interesting articles on the site here. You guys can check these out yourself with digital currency, Bitcoin, and stuff like that. Now, I had somebody that asked me about Bitcoin this week, and I didn't mind sharing with it. I'm not a hater of Bitcoin. I don't really mind Bitcoin, and but basically, she was just asking, about my thoughts of Bitcoin, and that's fine. I share my thoughts with people all the time. I don't invest in Bitcoin. And she wanted to know why. And I just told her just because of my training, my training, understanding money and all this other stuff, you start to really understand what's really going on here. And I referenced a couple of books for you guys. If you want to check out, these are really short reads, under 100 pages. This is Murray Rothbard's book, What Has Government Done to Our Money? And another book here, The Case for 100% Gold by Murray Rothbard. Well, this guy basically, he's an economist. He talks about what is money. You got to understand what is money. And he basically breaks it down that money is a commodity. Okay. So the thing that's interesting is that technology, and I've been, posting on Facebook and stuff like that about how exaggerating technology is. It's overhyped. It's always overhyped. Technology is always overhyped. They promise to deliver so much great stuff and you just normally don't get it, And I really haven't seen any technological breakthroughs greater than the smartphone in the past, since the smartphone's been invented. So smartphones, they do a lot. Other things, they haven't really made a significant improvement, okay? But technology always overhyped. You guys remember back in the 90s, they was talking about having flying cars and all this other stuff. We're supposed to have all that before 2000. And, we still don't have it. And if they do, it's just not what they're going to, make it seem to be. So technology is always overhyped. They got to hype it. They got to sell it. And so, with technology, same thing with cryptos, all the stuff is technology. Okay. They can always improve it. They can always make it better and stuff like that. But the fact is that it is in the internet world. It's the artificial intelligence world, the artificial world. It has no value in the real world because it's nothing tangible. It's nothing actually. So it doesn't have any value. And so a commodity is something that's real that you can use for something. Okay. So Bitcoin and any other crypto currency, I just, I don't understand. I'm gonna just say I don't understand the value. Doesn't have any intrinsic value to me. I understand the blockchain technology, and that's great. People can use it on the internet. But as far as a currency, I don't see what benefit it really brings to society. If you ask me. Again, money is already digital. I haven't really seen cash in years. Using Samsung Pay and stuff like that. So I don't really have a need to use a Bitcoin. I use my regular money. It's already digital. So to me, it doesn't feel any kind of void for that. Now, I understand the blockchain technology is supposed to be good, but this thing is not tangible. So I can't see myself giving value to something that's not real. It only exists in the mind. It doesn't even have a physical, tangible, piece to it. Right. So to me, it doesn't make any sense from that perspective. And so, I tell you this, it was this one time where back in the day, I had dated this one chick, And she was telling me how her and her father, they buy stars. I don't know if you guys ever heard that you can buy stars? But anyway, she told me that her and her father, they buy stars. And I was like, what? You can buy stars? The hell you mean you could buy a star? Like the stars way out in the sky? She's like, yeah. So she came through, she pulled out her certificate, and she showed me her certificate from her star and the name of it. And she was trying to show me the star. And I was just like, yo, that's crazy that you can buy a star. But for someone to buy a star, to put a claim on something that's in the sky, I mean, what is that really? Is it really that you really buy a star? I mean, you can't do anything with it. So to me, it's just a waste of money. It doesn't make any sense, right? So that reminds me of this, because I had people hit me up about these NFTs that's out now, and you had Jack Dorsey comes out and he's selling his first tweet. This is how ridiculous society has become, that you can sell a tweet. I just don't understand. So for me, maybe I'm too logical that I can't understand or comprehend it. And from my economic studies, none of it actually makes sense. You can't, sell me some crap in the digital world. It just doesn't make any sense. Not like that. It reminded me more of, like I said, with the kids playing V-Bucks last time, we were talking about V-Bucks on Fortnite. It's a token, a digital token. You exchange some real money for a digital token. And I even said the same thing to my sons. Like, are you going to get an advantage from this in the games? No, we're just going to get a skin. I'm like, okay, you're going to exchange real money for this V-Bucks type stuff. Well, Bitcoin, all this other stuff reminds me of the same thing. And back in the day, man, listen, when I used to do promotions, I had to get like this one party that we threw, had to get this liquor license thing, but we couldn't sell the liquor, but we could serve it. So you had to get this permit thing so that you can serve it, but you couldn't sell it. And so we had to find a way so we can make some money. Now, I don't know if it's legal or not, but that's what we did. Okay. So the permit itself was legal, but the way we had to go about it, we had to keep our bar separated from our token stand. We created a little token stand where people can go and exchange their monies, and they can get their little tokens, and then they'll take their ass across the hall where the bartender was at, where our bar was at, and they would exchange their tokens to get the goods and services that they wanted. So the tangible, the good, was the alcohol. You wanted to drink, and that's what you did. You just exchange the money for a token so that you can actually get that. I mean, to me, I guess crypto stuff reminds me of something like that. But I just don't really see the real value in it. Although you can make money in crypto. So as I mentioned, I'm not a hater. If you're going to make some money, go ahead and make your money. But if anyone's asked my position, that is my position. So I did want to address that. All right. So in the real world, you need goods and services. And we had our PMI numbers that came out. Now, the PMI came out at 60.8%. It was an increase of 2.1%. This is inflationary. OK, this is the manufacturing. They're telling us that things are expensive. They're growing. So just a couple of highlights from the respondents here. They said that the first one, they're in computing and electronics. They said that the pandemic is affecting their terms of getting materials to build. So they're having problems with getting the material. Now, remember, demand is still high, but they're having issues getting the supply. Suppliers are complaining of lack of available resources, people for manufacturing, creating major delivery issues. See, people still need stuff, but when you got people locked down, you have all these regulations from the government. You can't have all these people because they're afraid of this virus situation. Well, I mean, you're not going to be able to meet the demand. So we're having supply chain issues. Here again, supply chains are depleted. Inventories up and down the supply chain are empty. Lead times increasing, prices increasing, demand increasing. Deep freeze in the Gulf Coast expected to extend duration of shortages. These are chemical products, okay? And then here, check this out. A higher rate of delinquent shipments from our ingredient suppliers. Struggling keeping our production lines fully manned. All right, shipping and increased lead times. Prices are going up and lead times are growing longer by the day. Supply chain is going to be stretched very thin to keep up. Things are now out of control. Everything is a mess, and we are seeing wide-scale shortages. This is the electrical equipment, appliance, and component sector. Labor shortages as suppliers are affecting material deliveries and prices. We are overloaded with orders and do not have the personnel to get products out the door on schedule. Prices are increasing so rapidly that many are wondering if the situation is sustainable. Shortages have the industry concerned for supply going forward, at least deep into the second quarter. Now, I like this one that this guy said that things are now out of control. Everything is a mess and we are seeing wide scale shortage. I mean, just keep it real, right? So again, these are the first order goods, you know. This is the manufacturing sector, the PMI. When they get things, they got to make stuff out of it. If it's already expensive for them, they're going to have to charge it to you. So everything in life is basically going to be going higher. Now, the feds believe that creating inflation is going to help the economy recover. But as we're going to learn in real life is that we're really not going to like the period that we're going through because everything is going to be really expensive. All right. So here is an article on the website called Hyperinflation in Germany, 1914 through 1923. By Hans Senholz. So you guys can check that out on your own time to get a little understanding of hyperinflation and how it plays out. Again, the website, the courses are for learning too, but the whole website is all about learning. Resources right here that you can actually use to learn. All right. Topaz dropped us some tickers that y'all can check out for some dividend yields. If you're looking for some dividend stock plays, check that out. Let me see. Record $414 billion of new treasury debt issuance poses a supply test for shell shock bond buyers. Yep. So the bond market, they're selling off crazy anyway. But we already pretty much covered that. You guys already understand. This one here was a service, the service numbers that came out. So we had the manufacturing numbers. Now here go the service PMI numbers here. The service numbers came out and basically telling you here, commodity prices increases in the last few months to propose price increases that are above and beyond normal expectations, causing significant concern. Okay. Now they're telling you this is an accommodation and food services. They're telling you the prices on their level is going higher. What does that mean for you and I? Prices are going to go up for us also. They're telling you, okay. Sales of residential real estate continues to be strong, even outstripping supply. Cost inflation and building materials seen as shortages develop. So they're having issues with even building out the houses. This is construction. So that's inflationary. Revenues have decreased while expenses increased in educational services. Oil and gas is a looming negative influence. Okay, price increases. I think you guys kind of get it. Now, some of the positive things I highlighted in red, it says the decline in COVID cases in 4 states that they operate in, combined with the increased vaccination rates, should bode well for our increased business activity moving in the second quarter of 2021. Again, it's speculative, but it's still is inflationary because basically everybody is counting on the economy to open up, right? So whether you believe in vaccines or not, the economy is going to open up. So they may give the credit to the vaccines. Well, either way, they're going to open the economy up. As things open up, people are going to spend more. They're going to go out and spend more. And prices are going to continue to go up. Okay. Now, remember with the hyperinflation thing, I showed you down here, hyperinflation. Once you understand how hyperinflation works, it's really bad when people start chasing prices. You don't want to get people chasing prices, meaning that people are going to try to get rid of their cash as fast as they can to get the goods and services that they need before the prices change. That mentality is basically what causes the hyperinflation, or I should say accelerate it to get us into hyperinflation. And so goods and services, again, as we talked about last time, that's where the value is at. That's why we see commodities continue to grow higher and higher. The money knows that's where the money is going at, into commodities, because people still are consuming. They're going to consume even more as we begin to open up more. The ADP numbers came out, increased by 117,000 jobs. The forecast was 225,000 jobs, and we came in at 117,000. So they're expecting over 200,000 jobs. And we end up getting this print. That was not good. They were expecting the jobs to be at this level, okay? But instead, we end up getting that level. So that wasn't good. All right, and those ADP numbers that came out. And this is the Philly Fed. I was telling you guys about the Fed president, him talking about it. But you know what's interesting? I think about what he was saying in his meeting. He was talking about the forecast that he has, okay? And I think somebody was asking him about the $1.9 trillion, stimulus package, which just passed yesterday. You guys haven't noticed that, but it was asking him about it. And he was saying when he ran his models, he don't see any inflation. But when he did his model, that he only factored in $900 billion of stimulus through his model, and he doesn't see any inflation. And so the question is why would you, do maybe a sensitivity analysis or scenario analysis with a $900 billion stimulus package where everybody's known that it's going to be $1.9 trillion. So I think he undershot that on purpose to try to hide this whole inflation situation, because we all know that 1.9, that's what just passed. And so he's undershooting it. So his forecast has to be wrong. Anyway, so here's some Bitcoin information here. You guys check that out again. Again, people was asking about that. So I already addressed that. OPEC and Russia agreed to keep a lid on oil production, sending prices higher. So I got the meeting here. It's right here on the website. You guys hit that, read more if you want to check it out. But basically, they're going to keep production low. Remember, economy is opening up. More people are out. That's demand. Demand outpacing supply. Prices are going to go up. So we're seeing inflation on every aspect of our life. And the feds are saying they don't see it. Okay. Anyway, but you can see here that they claim they're going to keep this thing suspended until April, with the keep the lid on the oil prices by, keeping production hampered. So when they actually increase the production, it's probably going to be too late. These things have these lagging effects, right? This doesn't happen overnight just because they increase the production, right? So we'll see how that all plays out. Inflation itself, I went back and hit the books for a little bit this week, and I still got some more studying to do, but this is one of those things that I thought I'd share with you guys, because as I go back through my studies, I'm going back in time to the 70s, which we had some really high inflation time for the US. So in the 70s inflation, anyway, you can see this is a little nugget right here from the book, and you guys can check that out right there. So anyway, just telling you how inflation accelerated sharply in the worst spiral since World War II. In fact, they not only decline, but decline severely. They're talking about stock prices, excuse me. So common stocks are a good inflation hedge. As most investors hope, they should have risen at a rate at least as great as the inflation. They certainly should not have fallen, but they fell. So basically saying how with that high inflation, it causes stocks to go down. So things could be shaping up like this. So anyway, but this is there for you guys to check out. The weekly unemployment numbers came out. 745,000, same old, extremely high unemployment levels. We're not being productive enough. We had to consume, and we had to import these things that we're consuming because we're not producing it. And this is really, really interesting. Okay. U.S. stocks fall after Powell's inflation warning. We talked about that already, but you could check that out here. Let's see. Same thing. The employment situation rose by 379,000. That was on Friday. So we got the employment situation numbers. So you guys can check that out as well. Antivirus software pioneer Mcafee charged by the U.S. with cryptocurrency fraud. I mean, somebody got to take the fall, I guess. This guy, Mcafee. If you guys haven't seen the documentary on him called Gringo, Gringo, make sure you check it out, man. This is a wild guy. Mcafee security antivirus software. You guys probably have it on your computers. Most computers just come out with them. Anyway, this guy was living like Grand Theft Auto in real life down in Belize. Crazy. But check out that documentary, Gringo. And anyhow, smart guy. He's been able to get away with all kind of stuff, murder, you name it. But they're going to get him on. I guess they got him on this. He's already locked up, but they charged him with some cryptocurrency fraud. I guess he was one of the first people on it. So anyway, crypto fraud stuff. Ron came through to play on Albertson. So I think it's worthy for you guys to check it out. As we just talked about, the cost of everything in life is going up. Your food is going up. Why not make some money off of it? This company here, Albertsons, it's a food company. I dropped a little fundamentals in there for you guys, but shout out to Ron for participating and bringing some of that research right on the website. Again, you guys can contribute, post your articles, research right here, and that's what it do. Gold and silver. Again, this is a little more lengthy. You're going to have to study these charts and stuff to get an understanding of gold. What's happening with gold right now. This is the oil market. The Baker Hughes rig count came out, so I talked about that. The Senate Democrats passed $1.9 trillion COVID-19 relief plan. So we kind of just talked about that, but basically that money is going to have to come out in the markets. People are going to get that money. They got tax money on top of it, and it's going to come out in the market in a way that is going to catch the feds with their pants down. It's going to cause a lot of inflation. People are ready to go to the beach. I told you everybody on my timeline is somewhere in another country traveling somewhere. I mean, it is what it is. People are getting more comfortable now. Berkshire Hathaway, this is Warren Buffett's their shareholder letter is right here on the website. Got the PDF, so you guys can click that and check it out. See what Warren Buffett is out there talking about. He's doing a lot of share buybacks. He's getting the hell out of fixed income, which is bonds, basically. He's like, that's not the place to be. And so, he's always being productive with his capital. He's going to get that money back to his shareholders. So that's what he's been doing. And you guys can check out, here you go again, got a couple of his records in his shareholder letter. He talk about it. Their holdings right here. This is what he's holding. You guys can see, what he bought it for, what's the market value. So you see where he's up at, see where he's down at. I highlighted the ones that's up and then left the ones blank that he's down at. But he's the Oracle, so he's doing pretty well. Those are his latest holdings is showing there. And then here is his track record year by year. Whatever his gold basically is when he was up, when he beat the S&P 500 basically. So beating the S&P, and then, when it's not, he was down. All right. This is another thing that's interesting too, to add to your analysis. This is about the population, understanding what is happening, where the money is at, right? You got the silent generation, baby boomers, Generation X, and the millennials, okay? And so you can see, the total of the workforce, where it's concentrated at. So we got millennials and we got baby boomers that's making up majority of the production. You got to have a productive society. Baby boomers is dying off though. COVID is taking them out. All right. But look at the millennial, look at the income, total income. Where's the money? Well, Generation X making money and baby boomers making money, more money than the millennials. Okay. And the millennials is actually making money are the older millennials, not the young ones. They're done. Okay. Not a lot of jobs, not a lot of opportunities for these guys. And so for that just taking a look at that here, when you have baby boomers dying out, that money, I mean, they're passing down their wealth to their generations, of course. But that's what your grandparents should have been doing. They should have been productive. It's got to be like the ant, don't be like the grasshopper, storing your wealth. And people always talk about greed and selfish, but it's not selfish if you were to store money and defer your pleasure by utilizing that money today, by actually deferring it and passing it down to your kids and your grandkids. In capitalism, a lot of people, confuse that with greed. You hoarding wealth. Well, you're supposed to spend all your money, go broke, and then your kid's supposed to have a harder time coming up. No, that's stupid. That is, ridiculous. And, it just kills me when people make that argument. No, greed is actually good. It's the fact that you have greed and you're working on trying to get that so-called greed to take care of your family, give them a better start in life than you had. I don't see that as greed at all, but I understand how some people say, oh, that's greed. Okay, whatever. I keep a capitalist state of mind, and I encourage you to do so too, because, you can't save people if you ain't got no money. You're not going to clothe the homeless, feed the poor without money. So if that's what you want to do, cool, get your money and then you do that freely. But anyway, just taking a look at that. That's a good chart there. Okay, there's some fundamental analysis there. All right, so cool. We got all the good juicy stories out of the way. Let's take a look at the markets. NASDAQ down slightly, -7 points. The ES is up. The Russell is up. Dow is up. Gold is up. In fact, I want to take a look at gold real quick. And I know that we're kind of, I'm trying to get us out early today. So if you guys got a couple of stocks you want to take a look at, we'll go ahead and we'll stop. But gold here, definitely, normally, gold is the inflation hedge. So with all this inflation that's piling up in the markets, gold's supposed to be up. And, people ask, why in the hell is gold not up? Well, we have a hypothesis. Well, we don't quite know for certain, but we know that, historically, gold normally goes up. Now, what's not good for gold is higher interest rates. So if interest rates are higher, then gold is bad. So that could be why we are seeing gold going down, because, again, the markets, I believe, is expecting the Feds to raise interest rates. And so it's, the market is a forward thinking mechanism. But you can see here, right here, this is the floor of gold. It is extremely sold off. This is a great location right here at the $1,700 mark. So $1,700 gold. This is a good price that I think that is enticing for investors from that high down here to this low. And I believe that we may be able to sustain this floor. We'll be able to find out this week if we'll be able to keep this floor in here. But somebody is obviously wrong. I don't know if the markets are wrong, but somebody's wrong. And this is very confusing. Okay, it is. But gold should be up. But I believe that in the end, gold is going to go up. Okay. As far as the physical bullion, you can't even get your hands on this stuff. Silver, gold. stuff selling like hotcakes, right? So it's a lot of manipulation that's going on in here. And I think it's to throw people off. Now, you could say that, well, some people say that, oh, well, Bitcoin is eating gold's lunch. And we have been seeing Bitcoin rising, and which is interesting. But Bitcoin has actually been going up. And, it was interesting to me that, people would, put money into this. It's just crazy to me, but that's what people do. But Bitcoin, just taking a look at the chart here, we kind of blew through these levels back here. And we're getting ready to come through this level here. So Bitcoin is looking like it's about to make another leg higher. And we can see it at the $60,000 target coming up for Bitcoin. Again, it's very speculative, so they make money off it, okay? But I think that we have a lot of margin out there, and investors are, liquidating their gold positions to get more cash and to try to work that cash into, higher risk, assets. It could be in Bitcoin, it could just be in other stocks or whatever. But yeah, so I mean, that's what I kind of think is happening. But I think that gold is, again, I want to see gold hold this floor around 1,700, and then looking for some gold positions because it's an attractive price. Ron said he bought GLD on Friday with a tight stop, so he's already in there. So we'll see. This week, gold is starting to turn around now, and it might move positive with equities. I'm not too sure, but I do like the price of gold where it's at 1,700. So I think that's definitely good. And then oil. Let's take a look at oil. If we can get a load, okay, there we go. There we go. So just taking a look at oil here. I got the gray rectangle here, just so you guys can see what's happened with oil ever since the election, as I had to explain this to other people who wanted to debate. And as I was letting them know, is that the market is a forward, future thinking mechanism. It's pricing things in the future. So at the election, we've seen oil go up since the election. It's been going crazy higher. Before Texas, the pink is, with the Texas, I want to monitor that as well with the Gulf lockdown here. So I got that highlighted as pink just to monitor, see how oil prices, continue, right? So this started right here. And it's continuing to go higher. And in fact, we had our Goldman Sachs summer target that was posted here. And you guys been knowing, I've been telling you, gold is going to go higher than $65 a target. Not gold, but oil. It's going to go higher than $65 a target. And we clearly see that we are higher than $65 a target. And it's not even summer yet. It's the spring. Okay. So when you take a look at, well, what's your summer target? Bingo. You got about $80. Okay. $80 and possibly $100. Those are my two targets. All right. So possibly $80 target, oil, which is going to be extremely high. I don't know if people are going to want to go outside and travel, with those kind of high prices. So we'll see. All right. All right. Now, consumer staples, as Ron was showing you guys with Albertson, but, when things open up, people are going to be consuming. They're going to be eating again and out and stuff like that. And so, keep your eyes on the consumer staple products. If you find some good value stocks in there, definitely take advantage of them. I think value stocks are definitely looking good right now. So that's good. Let's see what we got here. Ron B, he got the MAC. Let's see what we got on MAC. All right. Masterreach. I haven't heard of the company before, but interesting. It had this $26 top, basically came down to the 50 moving averages, moving sideways on this here. I don't see any other movement that is going to go further higher, but it is still above this 8 moving average. I'm not seeing any indication that it's going to pop higher though, but sideways probably on this one here. So you may want to drop an iron condor or something. I'm not too sure, but it's looking like it needs some size. Probably gonna do some sideways action. HP. Okay, HP bumping. All right, cool. That's a really, really sharp candlestick right there. That's obviously bullish. Okay. Let me go back to the weekly chart on that. All right, yeah, so we're seeing it on a weekly chart when we step back from it. All right, and we can see that it was struggling back here, found this floor. All right, that was the floor. Looks like again, the high hill plays is what I call them. You find the stocks that hit that floor and they start to shape up like a high hill. It's up against the 100 moving average. And this is a key level of resistance where we are right now. And so basically you want to see if this thing is going to clear this zone for a target up here at the $45 target. But yeah, so it is bouncing. But you want to make sure it doesn't get rejected up here like the airline stocks did on Friday, because again, you had a lot of people speculating about the opening of the economy. But you take a look at, let me see, like United Airlines here, again with the high heel play, right? You got the floor right down here from that high, then it starts to come up, and then it meets resistance, but it got rejected here as it came down. Okay, so that it sets up for a pullback. And that can present another buying opportunity. But yeah, the same thing for the airline stocks. They all got rejected right up here. Boom. Okay. So you could get some better entry points. But I think they're going to open back up. But again, we don't know. We'll have to see. All right. Bank of America, bank stocks. Yeah. So yeah, Bank of America is definitely going up higher. Let's see. You got this $40 target on Bank of America, actually, with all this stimulus here. Yeah, the financials, we've been noticing the financials been doing good with the stimulus stuff. So I would imagine that they will continue to do good where they are. Yes. Cisco, another good one. But you know what? I think I like Cisco is good, but I like again, it still hasn't quite cleared the 8 moving average. Let me see. Let me go on a daily real quick. Okay, here we go. So looking at it on a daily, looks a lot better as it came down off that bounce. Okay, I see what you got going on, Ron. Come down, boom, tag the 100 and get a bounce. Question is, do we go sideways or do we go higher? That's the question on this one here. So let's see if we got some levels. From that swing high to that low, we should be able to push through the 47 right here, through the 618, before we get any real, resistance here, possibly. So if you're in there, that's good. Depending on what options you plan, you can get out of here at the 618. If you got down here, get out of the 618 with a profit, or even the 786. You don't have to ride this all the way up to 50, but the $50, that's the target on this one here. So that looks good. Let's see. We got VMware. VMware is another one. VMW. This one might be good. I sent a squeeze, real choppy, sideways and everything. We go back to the weekly chart. It's pinching and getting closer to it. It's got to make a decision. But it's got great fundamentals on this thing, though. So the fundamentals are good. Payout ratio of 14.89%. PE ratio 19%. So a good, a fundamental stock for that sector. And you may want to pay attention to it. I hate long squeezes, but I think it's about ready to make a decision. So take a look at that. Anything else you guys want to take a look at, or any other questions? Make sure you check us out at Wallstreet, Jackboyz.com. Registration is free. Tell a friend to tell a friend. Make sure you invite somebody at your profile right there. Also, another thing, man, is if you're doing your research right here on the website in the newsfeed. I don't know if you guys noticed or not, but you can go back, okay? And you can pull some of the juice that we're popping right here. You go hit that search feed right there. Type in what it is that you're looking for right in here, okay? So if you type in what you're looking for, you'll get some results that you can go back and check out, right? So let me just type in hedge, for instance. And it'll fill out, it'll basically search, so I can get this thing, the search feed. This is how you search the news feed. But you'll go in here and you just type in what it is that you want to search, and it should come up. You got this search button right here, the big one, where you can actually search the site for whatever terms that you want to look at, right? And I was telling you guys earlier about the yield curve thing. So you just go and click that and it'll load up from the website, all information that we have in there on that particular thing. So, yep. So this is what you use for your resources for searching and stuff. Okay. All right. So a little lag there, but yeah, you got it. There you go. It's the yield curve chart. But anyway, I just want to show you guys that little technique that you can use using the website. Last one, bull flag possible, WW. Okay, I can check that. WW. Okay, well, you got just looking at the 200 moving average, you right here at $40. Got a little $5 move out that you can squeeze out of this thing. Yeah, I think you can squeeze the $5 out of it. It is bullish, and it is kind of forming a flag. So you'll see it starts to form a flag here. Then the next level up will be about $40. So you can squeeze something out of that one as well. Yeah. All right, gang. So with that being said, man, you guys know how you guys already know how we get down, man. Right here on the website. Hop in the chat room. We're in there every day, all day. So you can see the plays right up in here in the chat room. Just get in there when you fit in. Open 24/7. Okay. And take advantage of that. Other than that, man, I'm gonna go ahead and call it a night. But I appreciate you guys showing up tonight. Y'all have a good one. Peace.